Okay, we're looking at the CompQ. This is Mark Espy once again, and must remind everyone that all that we speak about here is for educational purposes only, not to be construed as a recommendation to buy or sell anything. Please do your own due diligence. So this week, again, similar to the other indexes, we had a nice move up on Monday. Then we had a sort of a dark cloud cover. It wasn't classic by any means because it didn't close far enough down into the prior day, but it was an indication to me that it was fading in terms of the move and the strength of the move. And I felt it was pretty much a relief rally anyway because there just wasn't a lot of push behind it, and that kind of confirmed my feeling on it. We gapped down and traded down the next day. Actually gapped back up. It looked like maybe it wanted to recover, but it continued down, and actually on Thursday a fairly large wick, and it stopped right at the 50 moving average, and it was rejected there. So it did spend a couple days above the 200 simple moving average, but couldn't sustain its move and came back down. Today we had sort of it's like a meeting line type of a pattern where it gapped significantly down and then traded up and closed very close to where the close was in the prior day. This is interesting to note here that there's a nice upper trend line here and lower trend line here forming a symmetrical triangle. So the breakout is a false breakout on this symmetrical triangle, and you're looking for, it constricts like that, and you're looking for a breakout one way or the other, but it could not sustain to the upside. So my feeling is we're still down below the 200 simple. We're actually in between the 50 simple and the 200 simple moving average. I believe we're going to come back down and test this area right here, which is about 2160. And you'll notice here in this orange line, this is actually a neckline on a traditional head and shoulders. There's left shoulder, head, right shoulder, so there's a trough and a trough right there, and that's the neckline drawn between those two. If we extend that, it actually is going to come over here about 2170, so that could pose some support on the way down as well. So the first thing that we need to see is if it can break the 50. It didn't act like it wanted to. We need to break out of the lower trend line of the symmetrical triangle, and then the next stop would be an extension of this orange line over here to about 2170, which could also add support. If it breaks all of that, then we're going to come down here about 2062, which is the low that was put in early July. There's also a double bottom here at about 2140, which needs to be recognized, and the February 5th swing low, which is about 2100. Okay, so if for some odd reason we were to continue up, and I don't believe that's going to happen, then the first area is the swing high just above 2300. We have a swing high here from June, 2350. Swing high from May at 2430, and then the top over here, which is at about 2535 from April. More likely, though, I feel we're going to come down because there's not a lot of tremendous volume here to tell us that the push up is sustainable. It's just kind of pretty average. And we did get a crossover on the stochastics, moving from the overbought area, and it looks again like the MACD wants to roll over. It looks like the histogram is moving back toward the zero line, showing a loss of momentum to the upside. If this actually rolls over, then we're going to have a divergence, MACD divergence, bearish divergence, because we have primarily an up move here and diverging to the downside with the MACD on the peaks. So I would say to you, we're sort of in a range. We're in a trading range, and it's going to break out, I'm pretty sure, but it's going to break out to the bottom side. So I would suggest that if you're long, you might want to make sure that you're hedged and that you're prudent with your diversification, your position sizing. So I look forward to talking to you next week, and I wish you an excellent week of trading. This is Mark Espy. Look forward to talking to you next week.